The world on path to collapse. One of the most intellectual, exclusive private clubs in the world predicts that the global economy and society will collapse somewhere between 2040 and 2050. Stay tuned to learn how the Club of Rome predicted the collapse of civilization, and how some of the world's most renowned scientists and economists support their predictions with scientific and economic facts. Welcome to the World Econ News, your daily dose of economics and finance. If you're interested in topics influencing the world's economies and global financial flows, this is the place for you. Watch till the end if you want to get the latest on everything. And don't forget to subscribe, like, and hit the notification button to get the latest updates. Let's go. The Club of Rome was founded in 1968. It consists of 100 members from current and former heads of states, UN administrators, high-level politicians, bureaucrats, scientists, economists, and business leaders from around the world. In 1972, the Club of Rome commissioned a group of scientists from the Massachusetts Institute of Technology to conduct a study on the risks of a doomsday scenario based on the limit to the growth model, aka LTG, by examining the limited availability of natural resources and the rising costs that would eventually limit the global economic growth. The report results were compiled in a report-style book titled The Limits to Growth, which made quite a buzz back then. The MIT scientists predicted the fall of society will take place around 2040 and eventually lead to a 22nd century similar or comparable to the early years of the 20th century in terms of the world's population, industrial output, transportation, and food resources. They also emphasized that the collapsed future society will have plenty of technological advancements that are not likely to translate into a global, sustainable economic wealth. Recent new research and analysis confirmed that the world economic system and society will begin to fall sometime in the middle of the 21st century. According to the new LTG-based studies, Earth has been terraformed beyond repair by greenhouse gases from fossil fuels pollution, bad investments, and reckless mining, thus paving the way for a future global economy that is poor in natural resources and unsustainable, and a planet Earth characterized by radioactive and heavy metal pollution. In 2020, Gaia Harrington, Director Advisory of the Internal Audit and Enterprise Risk at the major global accounting firm KPMG, updated the LTG model using new empirical data. Not only did she find the old MIT predictions accurate, but also the world has until the early 2030s to change course and avoid collapse by investing in sustainable technologies and equitable human development. She also noted how the world cooperated and coordinated quite fast to tackle the pandemic and develop a vaccine. This large-scale intensive global behavior proves beyond any doubt that humanity is capable of responding rapidly and constructively to global challenges. She said, "The necessary changes will not be easy and pose transition challenges, but a sustainable and inclusive future is still possible." According to another report by Professor Ugo Bardi from the University of Florence, the industrial civilization is likely to deplete its low-cost mineral resources within the next century, with debilitating impacts for the global economy and key infrastructures within the coming decade. In 2008, the Australian Government Scientific Research Agency issued this statement. The limits to growth forecast of potential global ecological and economic collapse coming up in the 21st century due to convergence of peak oil, climate change in food and water security is on track. Actual current trends in these areas resonate strongly with the overshoot and collapse displayed in the book's business as usual scenario. A more recent report by the Club of Rome concludes, the phase of mining by humans is a spectacular but very brief episode in the geological history of the planet. The limits to mineral extraction are not limits of quantity, they are limits of energy. Extracting minerals takes energy, and the more dispersed the minerals are, the more energy is needed. Only conventional ores can be profitably mined with the amounts of energy we can produce today. The combination of mineral depletion, associated radioactive and heavy metal pollution, and the accumulation of greenhouse gases from fossil fuel exploitation is leaving our descendants the heavy legacy of a virtually terraformed world. The Earth will never be the same. It is being transformed into a new and different planet. A study by Angela Ruskin University's Global Sustainability Institute also found overwhelming evidence for resource constraints. According to Dr. Alid Jones, head of the Global Sustainability Institute, across a range of resources over the short years and medium decades term, resource constraints will, at best, increase energy and commodity prices over the next century and, at worst, trigger a long-term decline in the global economy and civil unrest. All these and other comprehensive studies also warn that the continuation of business-as-usual mining and utilization of the world's fossil fuels can trigger runaway global warming that can eventually destroy Earth's capacity to sustain life. Professor Badi said in 2014, "If we insist on investing most of what remains for fossil fuels, then we are truly doomed. Yet, I think that we still have time to manage the transition. To counter depletion, we must invest a substantial amount of the remaining resources in renewable energy and efficient recycling technologies, things that are not subjected to depletion, and we need to do that before it's too late. That is before the energy return on investment of fossil fuels has declined so much that we have nothing left to invest." Here are some current real-life examples that clarifies how the level of scarcity or abundance of an important natural resource is a mere symbol or single factor in the large formula investors and corporations have to contemplate before investing. Businesses have to consider the amount of energy and investment needed to mine and refine the resource, the supply chain costs, and the resulting profitability levels. Number 1. Current uranium production from mines around the world is already insufficient to fuel existing nuclear reactors. The gap is being filled by the recovery of uranium military stockpiles and old nuclear warheads. A worldwide expansion of nuclear power would be unsustainable due to gigantic investments needed. Nuclear energy is costly and causes massive sums of private and government funds to be diverted away from renewables. An example of this is the current attempts by the French-led bloc in the EU to label nuclear energy green and divert more than $500 billion into nuclear energy. Michael Dittmar, a nuclear physicist at the European Organization for Nuclear Research, argues that despite large quantities of uranium in the Earth's crust, only a limited number of deposits are concentrated enough to be profitably mined. Mining less concentrated deposits would require far more energy than the mined uranium could ultimately produce. Number 2. A detailed U.S. geological survey shows that chromium, molybdenum, tungsten, nickel, platinum, palladium, copper, zinc, cadmium, titanium, and tin will face peak production followed by declines within this century. Because declared reserves are often more hypothetical than measured, meaning actual reserves are probably much less than declared, and a good portion is energy-intensive and costly. Physicist Professor Rui Namorado projects an imminent slowdown of copper availability. He says, although production has grown exponentially, the grade of the minerals mined is steadily declining, lifting mining costs. Peak copper is likely to hit by 2040. Production of lithium would also be strained under large-scale electrification of transport, infrastructure, and cars, according to Amelia Soumalanian, an industrial ecologist from the University of Lausanne. Sustainable lithium production requires 80 to 100% recycling. Currently, this stands at less than 1%. This means if lithium recycling levels are not immediately increased, humanity will have to go back to fossil fuels for transportation in a few decades. Current alternatives to lithium are also energy-intensive, expensive, and unsustainable. Nickel and zinc, which are used to combat iron and steel corrosion and for electricity storage in batteries, are projected to peak in just a few decades. According to engineer and metal specialist Philip Bihu, The easily exploited part of the reserves has already been removed, and so it will be increasingly difficult and expensive to invest in and exploit nickel and zinc mines. There are substitutions for nickel and zinc, however, they are costly and require considerable investment. Number 3. The decline in phosphorus is alarming because it's critical to fertilize the soil and sustain agriculture. Global phosphorus reserves are not running out. However, physical, energy, and economic obstacles are resulting in only a small percentage of it being mined. Meanwhile, the crop yield on 40% of the world's arable land is already limited by economical phosphorus availability. According to physicist Patrick Derry, several major regions of rock phosphate production, such as the island of Nauru and the US, which is the world's second largest producer, are post-peak and now declining, with global phosphorus supplies potentially becoming insufficient to meet agricultural demand within 30 to 40 years. The problem can potentially be resolved as phosphorus can be recycled. If the present business-as-usual and unsustainable economic growth trends in industrialization, pollution, food production, and resource depletion continue unchanged, the limits to growth on this planet will be reached sometime within the next 100 years. The most probable result will be a rather sudden and uncontrollable global decline in both population and industrial capacity. Would you like to learn more about what influences the world's economies and global financial flows? Click on one of the videos that shows up on the left, or go to our channel to find other interesting topics. I'll see you next time.